Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check global equity markets. They finished mostly lower in overnight trade, while the US dollar and bond yields moved higher. On Wall Street, the Dow managed to rise, whereas the S&P 500 and NASDAQ both ended lower, dragged down in part by Nvidia. The chipmaker dropped ahead of its earnings report on Wednesday, with concern from investors that if it doesn't meet lofty expectations, it could undermine confidence in Wall Street's AI rally, which has benefited companies including Alphabet, Microsoft and Meta. Tesla fell after Canada followed the lead of the US and European Union by announcing the imposition of a 100% tariff on imports of Chinese electric vehicles. US-listed shares of PDD Holdings plummeted after the Temu owner missed market expectations for second quarter revenue. Boeing slipped after NASA picked SpaceX over the aircraft manufacturer's Starliner to return its astronauts from space next year. And the energy sector was among the best performers following reports of oil supply disruptions amid the geopolitical conflict in the Middle East, which lifted crude prices. And US-listed shares of BHP rose along with Rio, which was up more than 1%, as the iron ore price jumped around 4.5% overnight. Well, in a sign of slowing momentum in business spending, new orders for US manufactured capital goods unexpectedly fell in July, while data for the previous month was revised lower, suggesting a loss on equipment that extended into the early part of the third quarter. Non-defence capital goods orders, excluding aircraft, dipped 0.1% after a downwardly revised 0.5% increase in June. Well, US Treasury yields have moved higher, with the 10-year up to 3.8% and the 2-year at 3.93 in the US dollar. It's rallied from an 8-month low, while the yen also rose against most currencies, as geopolitical tension in the Middle East did intensify, prompting investors to seek those safe haven currencies. The Swiss franc also gaining after Israel and Hezbollah exchanged missile strikes over the weekend. And the risk-off sentiment also weighed on the Aussie. It's trading at around 67.7 US cents. Well, let's get across all those market movements at the moment. Steve Sosnick joining us from Interactive Brokers. Steve, good to catch up with you. Let's start on Friday, shall we? And well, it looks as though Jerome Powell he's brought the punch bowl back to the table, isn't he?
Yeah, thank you. Yeah, great to see you this morning. He has. That's a great way of putting it. The old saying that central bankers are supposed to take away the punch bowl just as the party gets started. I wouldn't say he brought it back to the table. The problem is he didn't really tell us what he'll be filling it with, how much he'll be filling it, and whether it's an adult beverage or just some soda pop. And so we need to learn a lot more. But I think markets have been waiting for a Fed pivot literally for years. When I looked at what might happen, what the results might be of this most recent Jackson Hole meeting, 2 years ago, the S&P sold off hard because he didn't pivot. And that was while he was in the process of raising rates, and rates continued to go up after. So the market has been way out there. So I think it's understandable why there was a bit of a relief rally when he pretty much confirmed that something is going to start in the way of rate cuts come September.
Well, the question, of course, is how much they're going to cut by. So, markets really pricing in some 100 basis points of cuts by the end of the year. Speculation whether they'll go hard and aggressive to begin with. What are your thoughts, Steve?
I'm on the camp that they stick to 25 basis points. There's a few reasons why. I think they don't want to make it seem like they're panicking. Yes, they've said they're data dependent, but the data is softening, but it's not soft. I mean, bear in mind, yes, the unemployment rate is up to 4.3%, but that is an incredibly enviable number by any historic standards. I think you could ask most presidents if they would sign up for 4.3 unemployment rate, and they would say sure. So that doesn't necessarily tell us that the jobs market rather is weak. He did pretty much confirm that there would be, that the dual mandate is back in play. It's not just prices, it's prices and employment. But still, I don't know that he wants to start off with a big bang. Also, politically, I think we can get away with 25 basis points because it's been so well telegraphed. I think if he does more than that, you will hear a lot of rumbling from the Republicans that he's leaning on the scale, that he's trying to curry favor with the Democrats, et cetera, et cetera. And I think that's just not something they need to or want to be involved in. I think you can get away with 25 basis points. There'll still be some squawking, undoubtedly, just because people will squawk. But I think that's probably the right place to start, unless the numbers tell us otherwise. And we'll get a lot of numbers in the next few weeks that'll help determine that.
Yeah, which numbers in particular are you looking at, Steve? And I guess point us to where the US economy is tracking, and also the effect then on earnings going forward. I mean, how do you see the equity market reacting at this point?
Equity market, has been very much, it, you know, they love buying the dips, and we got a dip, a good, viable dip 3 weeks ago. And now it's on to chase the rallies, which has also worked for people before. And so let's see what the numbers say. We've got later, later this week, I think Friday is the PCE deflator. Of course, you have Nvidia on Wednesday, as you alluded to before that, but that's not economics per se. That's certainly a market moving potential. But let's stick to the economic portion of the Fed to answer your question. You've got PCE on Friday. We have a holiday Monday. Following Friday, September 6th, our time. September 6th, everybody's time, but September 6th, we get the jobs report. The August jobs report, which comes out first Friday in September. That's going to tell us a lot. We're going to learn if there were some temporary measures that caused some dips. There was some weather-related stuff that may have affected the numbers negatively last month. If those get unwound, you're not going to see a very happy market. On the other hand, if the job picture continues to weaken, that strengthens the Federal Reserve's resolve. And then the following week, we have PPI and CPI. And then, of course, the week after that, September 18th, is the FOMC meeting. So there's a lot to come. There's a lot to come down the pipe in the coming just under 30 days. And all of them have the potential to really be market moving, and really, the economic numbers can really push the Fed's hand one way or the other.
And before that, as you mentioned there, Steve, we're going to get Nvidia's numbers on Wednesday, your time, which equally can be market moving. How critical is this result going to be, particularly given that AI rally we've seen on Wall Street, and what it's going to tell us about going forward? Because there are questions about whether those AI returns, maybe not immediate, but been pushed further towards the horizon.
That's exactly the case. And this is going to be very critical, because Nvidia is on perhaps the best streak that certainly that I can recall. I don't know, I can't find a better precedent for a company that has continued to beat on top line, beat on the bottom line, raise its guidance, and then do it all again. And it's done it pretty much for 6 consecutive quarters, and it's just remarkable. But at some point, you have to wonder: are the end users slowing down their purchases at all, or at least stopping the order flow going further out? We're going to learn a lot about that. We learned from Alphabet that they're spending a lot of money. They don't necessarily know when this is going to pay off. They didn't give any hints that it was slowing down, but they certainly didn't make it seem that it's helping their bottom line. We heard the similar thing from Mark Zuckerberg two quarters ago. He wisely stayed away from the topic this quarter because it hurt his stock 2 quarters ago. And so, and those are the what I would call the AI providers. You've got the semiconductor companies, which make the chips, and you've got the Metas, the Googles, the Microsofts, behind OpenAI and stuff, who are the providers, the software providers. But ultimately, you really need the end users to start finding some profitability and some productivity gains from it. Amazon has made some comments that they're seeing some productivity gains in terms of their programming. But I haven't heard that replicated from a lot of other end users. So what happens in that situation is you have a normal cycle where, we saw this with the internet, where it took a little bit longer, took some time for the knowledge, for the use of it to catch up to the raw science of it. And I think that's kind of where we stand. And the other question is, there's supposedly some delays in their Blackwater chip. We'll hear about that, whether that's the case. And also, don't forget, Jensen Huang has been selling bucket loads of stock. He sold $323 million worth of stock in July alone, and he's selling 14 million a day. Kind of had to take a break because you can't do it right up to you can't do it over your earnings. But this is, think about if you're buying Nvidia, whom you're buying it, who you may be buying it from. Does he know more than you? Maybe, I don't know.
Well, they are some boggling numbers, but I guess we should be used to that by now when we're talking about Nvidia. We look forward to those results on Wednesday. As I said, Steve, great to get your analysis. As usual, thanks for joining us from Interactive Brokers.
Pleasure as always, Andrew. We'll talk again soon. Take care.
Let's take a look at where we're likely to open locally when we get underway in just a couple of minutes' time. Pretty much flat, as you can see. Looking for some direction there, but the focus clearly locally is on those earnings results with some big ones out today, including BHP, Woodside and Coles. We'll get it right across that when we begin in just a couple of minutes' time.